All right, I think we are live. Let me just check the feed. I just want to make sure we are live. I'm on Facebook. Yep, looks like we're live. So we're going to jump right in. My name is Beverly Winstead. It's time for Tax Talk Tuesday. It's 2:00. So today we're going to be discussing cryptocurrency. And I have with me Joyce Sistrunk and Brent Simpson of Bold Investing Education Academy. Before I jump right in, I want to make sure that this feed is working, so bear with me for a second.
Yeah, I just got the notice that we're
you got the notice that we're live? Okay. Are you there, Joy?
I am here, and I can hear you loud and clear, and I too got the notice that we were live.
Okay, cool. I just only saw myself, so as much as I love being on camera, I want to make sure you guys are seeing also. All right, so I will start. I'll wait for a few more minutes for people to join, but while people are joining, because this is a very important topic, and I know for my listeners, I want to make sure that they understand cryptocurrency and what's happening in the market right now. I think it makes sense for us to start actually probably with Brent giving just a overview of what cryptocurrency is. But before we start, let me go ahead and introduce myself. My name is Beverly Winstead. I am a tax controversy attorney. For those of you who don't know me, I am the managing attorney for the law offices of Beverly Winstead, and we typically help people that have problems with the IRS. If you're not in trouble, we do a significant amount of tax planning for clients to help them strategize around ways of paying all their money over to the IRS. I also have with me Joy Sistrunk. I always chop up your name because it's like the Smith and it's the Sistrunk. You know, Joy, why don't you introduce yourself?
Sure. My name is Joy Sistrunk of Premier Group. We are a CPA firm. We work with individuals and businesses on their taxes, and we also do tax planning and help them with compliance issues. We want people to understand, you really shouldn't just be talking to your CPA, your tax attorney just at tax time. You really want to do a lot of planning. And I think with this crypto and people, they're now crypto millionaires and billionaires. I don't think they understand the tax side and who's coming for them and who's going to be knocking on their door. Cha-ching.
The IRS.
So hello, everybody. My name is Brent Simpson. I am with Investing Education Academy, and I am one of the 3 Money Amigos. So we are utilizing Attorney Beverly Winstead's Tax Talk Tuesday space to have a /3 Money Amigos conversation with you all, because cryptocurrency is not only changing how we move our money, but it's changing the way we look at just investing overall. And a lot of it is new. We don't understand all the moving parts. So today we're going to dive in to cryptocurrency. And again, I'm coming from you in this regard from Investing Education Academy. And Beverly, let me ask, do you want me to go ahead and do a level set on what cryptocurrency is now?
Oh, yeah, absolutely.
Okay. So cryptocurrency is, in fact, it's a way of investing inside a cryptologic investing platform, which is called cryptocurrency. Everybody normally knows that it's Bitcoin, right? Let's just call it what it is. Bitcoin is not the only cryptocurrency out there. And the way we look at it is, it's this new way of investing into really companies that have a utility that provides, it might be a more efficient way to transact payments over the internet. It may be a decentralized way of moving money to family and friends. But the whole crust of cryptocurrency as it relates to us is it allows for a decentralized way for business to occur. And the various companies out there are, the biggest ones we know are Ethereum. We know Ethereum Classic, we know Bitcoin Cash, and some of you all might be familiar with Litecoin. Those were initially the primary coins. And then there's a secondary coin space. And then the secondary coin space, they're now called altcoins. Some of the altcoins include Cardano. It could be Matic, and the such. But those altcoins, the secondary market of coins, are now being treated very similarly to how the primary coins were being treated years ago. So all these things, we're talking about, the biggest thing that you should know is that there are people right now who this year alone have made 200% rate of return. There's some people who made 2,000% rate of return in this cryptocurrency marketplace because it can actually happen. There's some people that have lost everything. But, in that space, we're talking today about those who kind of won, and those who had a very successful portfolio. You shouldn't just go out and start spending money because you think you have an unlimited supply of gains. The IRS is very aware, acutely aware of the gains that people have made in the cryptocurrency space, and they're adjusting to that as we speak. So we're going to dive in today. So if you are a cryptocurrency investor, if you are cryptocurrency curious, this is the podcast you really want to listen to, because we're going to dive into what the IRS is gearing up to do, government regulation, and just what cryptocurrency should mean to everybody who's watching.
Wow. Thank you for explaining that. Because I know a lot of people, when we talk about the cryptocurrency, they just don't know what it is. And like you said, I think the basic definition is just digital money, right? It's a utility. It's things that everything that Brent explained when it comes to crypto. So, Joy, what is the IRS doing?
Well, they have come up with a study, and they said that as we know, there's always been a tax gap, but right now they're saying it's about $600 to $700 billion. And so they are wanting to regulate cryptocurrency in the same way they regulated foreign investing, and having crypto actually report into the IRS and to have people begin to pay taxes on, because there's a bunch of people, since it wasn't really something, people were always technically supposed to be paying taxes on it, but they couldn't really track it to understand and to tax it. So they are literally now setting up systems and starting to require the cryptocurrency exchangers like Bitcoin, like Ethereum, to do reporting to them so that they can then track people. And you're going to have, unfortunately, large tax bills because people haven't been paying taxes. We don't know how far back they're going to go, but I'm going to assume that they're going to require them to go back at least 3 years and give them back data so that they can then review your tax return to see who's been reporting and who hasn't.
Right. So one of the things I know we saw this year, even with preparing tax returns, is that there's a question that used to be like on Schedule B of the tax return, where the Schedule B is where you report your interest income, your ordinary dividends or qualified dividends activities, and foreign accounts. It used to be on the Schedule B. What IRS did, and the question was, have you obtained some kind of financial interest in cryptocurrency? It's not even about whether or not you bought cryptocurrency. They're saying, look, we know you don't even have to buy cryptocurrency, right? Because some people barter Bitcoin, yes. Some people barter Ethereum, some people barter, what is it, Dogecoin?
Yeah, Dogecoin.
Dogecoin. I was saying, I was like Dogecoin for so long, and then I watched Saturday Night Live with Elon Musk, right? Dogecoin, but IRS is not even saying, look, tell us that you bought it. They're saying, no, is there any way that you obtain any financial interest in it? So that's how serious that they're taking it. And they moved it from the Schedule B to the very front of page. 1040. So there's no way. They're saying to you, look, there is no way that you cannot answer this question, and there's no way you can say that you didn't see the question, right?
And, so, Bev, to that point, a lot of that's happening. And the reason I believe the question is probably stated that way is what you mentioned earlier. There's two platforms that people can benefit from cryptocurrency without owning it. And that's called staking. And you can also do what's called swapping. And in this staking or swapping, you may not have ever purchased the coin, but you actually derive a financial benefit from just have had access to it. And that's probably why they posed that question that way.
Right, so you're going to see IRS is measuring compliance. So they have, from what I understand, and if you have been following me or paying attention, I like to keep my ear to the ground, right? So that I can bring you the information that you need, when it comes to IRS. And my ear has been to the ground. And one of the things that I've been hearing is that the IRS has set up a whole unit just to deal and study with cryptocurrency, which they've had around for years, but now they're gearing up to figure out how they're going to audit cryptocurrency users, or holders. So there's a couple of things that I think what we wanted to bring to you when we talk about this discussion of cryptocurrency is that two things, and Joy or Brent, you can chime in, but I know when we were discussing this last, there's two things that we really wanted our listeners to hear. And it really had to do with, look, you cannot hide anymore if you, in fact, own cryptocurrency, right? Because the exchanges will be required to report this data to the IRS. And then the second thing is that, look, if you don't know what you're doing and you all of a sudden, and we saw this year, I can tell you with last year, March 2020, Bitcoin was $8,000, right? And earlier this year, or maybe late last year, it went up to $60,000. And you see people that, have bought into Bitcoin and now they have significant gains when they sell, and now they're dealing with a tax problem. So we want you, even as account holders, to think about the tax consequences that you may face if you decide to sell your cryptocurrency. Joy, do you mind just discussing a little bit about the difference between short-term and long-term capital gains?
Sure. So short-term capital gains are when you hold your stock for less than a year and it's going to be taxed at a higher rate, because the object or the government's goal was to have you invest long-term so you could build for your future. So when you do short-term trading, it is at a costlier rate, and it's actually you're taxed at your ordinary income tax rate. So if your ordinary income tax rate is 25%, that's how much you're going to pay on that short-term gain. And so a lot of people, like you said, Bev, a lot of people got in when they saw it going up and they kind of got out. So probably I would say 70% of the people who invested last year, if you were anything like me, you were a first-time investor. When you sold your stock, or your Bitcoin or whatever you sold, you're going to have short-term gains, and it's a much higher rate. Whereas on the long-term side, if you hold it, I think, what is the max right now for 2021? It's 15%. You're capped at 15%. And so that's why you see rich people do passive investments for long-term gains, because they want to pay a lower tax rate. But again, they use a lot of strategy, and they have a lot of CPAs and tax attorneys on their team to make sure that they're paying the lowest tax rate possible.
Brent, can you talk a little bit about the emotional aspect of investing? And the reason why I say that is because,
Dogecoin.
I don't know why I want to still call it Dogecoin. I think it's the way it's spelled. Dogecoin. I bought in when it was very low, full disclaimer. And then when it went up, because it was like one of those things where it came to like remember GameStop, when everybody drove that price up of GameStop and AMC, remember? And so as Dogecoin went up, I was like, oh my God, I got to get out. And then I thought about it, like, I was like, wait a minute, this is short-term capital gains, right? And so, I'm not saying it was a lot. I don't want to say I pushed myself in a totally different tax bracket, because that's not true. But when I thought about it, I said, Beverly, you are a tax attorney, and you made it an emotional decision because you were like, yo, I got to get out. But I know the ramifications. So how do we stop making those emotional decisions when it comes to investing? And very quickly, like you said, cryptocurrency is one of those things where you can become a millionaire just like that, right?
Mm-hmm. So, I mean, number one, it's
just
hard.
Like that.
Yeah, you're going to lose a lot too. We gotta say that part. And I guess full disclosure for me as well, I just bought some additional coins, Doja coins, before this live. So, it's one of those things. It's really hard to take emotion out of investing. It's hard to take emotion out of life, and it's the equivalent to saying to somebody take emotion out of life. You can't. So I think the best thing is to understand how do you regulate your emotion around your cryptocurrency investing. And the best way to do it that I would suggest is knowing why you're making the purchase, what your goals are with the purchase, and what your target number to get out of the purchase is before you make the purchase. And if you know it beforehand, it helps. And things are just happening, and you feel like a lot of us, we feel like things are happening to us, and it causes us to respond. So when you have a large gain inside of anything, and let's just say cryptocurrency to stay on subject matter, it's best to have a team. Have an attorney Winstead, have a CPA Systrunk with you. Have somebody that you can call and say, you know what, this just happened. Financially, this is what I'm thinking, because they're not thinking from the same emotional state of viewpoint as you. So they can give you educated, professional stance on it. Because I promise you, even for us and those on the Three Money Amigos, when it's our money, we're still fighting with the emotion of it. But I can also promise you this, as the Three Money Amigos, we've been in it long enough. When people bring us their issues, we're able to look at it from the outside and we can give a better response than we may even give to ourselves. And so it's really interesting, how it all plays out when you're a professional, when you're an investor. And with us knowing both sides of the coin, it gives us a unique position where we can empathize with you as you go through it, but we also can give you the intellectual solution that's going to help you make the best decision as it relates to your money and your taxes.
Yeah, let me chime in for a second, because like I said, with me being a tax attorney and understanding the tax ramifications, and it was like when I began to reflect on it, like the emotional decision I made, I definitely understand like how you can get swept up in the emotion of it. But the good thing is, like you said, when you have a team, like I did this early, so early in this year, which means that I still have the rest of the year to kind of strategize how I'm going to offset, any tax liability that I may have incurred based upon that emotional decision that I made. And that's why it's important. Like I said, you and I, Brent and Joy and I, we talk all the time about, even ways that we're going to, mitigate our tax bills. And so having a team is certainly important.
It really is, because like now.
Yeah, and just understanding. Okay. I was gonna say it starts from accounting, right? That's where it really truly starts, because most of these platforms, they're not tracking the cost basis or how much you originally paid for it. And if you don't have a system for your accounting, when you show up to get your taxes done, where are the numbers? What are the numbers? And now your accountant or your tax professional, they have to go do a lot more research, because you didn't start off with a strong accounting system to track your investments. So, I mean, I really want to say it starts there, just having a proper accounting system in place. And how are you going to get that? Talk to your accountant. So it goes back to your team. You have to have a team. So, Joy, I guess that was a perfect segue into you, right?
Yeah, I was going to say, because that's like, no, you took the words out of my mouth, because if we don't have the right basis, it could actually cause you to pay a lot more than what you needed to pay. Because if we don't know, and then sometimes if we're not able to find out, then your basis might be zero. Or if you're audited, the IRS may say, we don't have support, so we're going to let it be zero. And so you can't, that documentation is going to be important. So with crypto, like Bev said, or they'll take the lowest point. So they'll assume, oh, well, you said you got in around 2010, you must have paid 8,000. So if you sold it for 60, that's definitely a $52,000 gain. And a short term, well, that's actually a long term. But if you got it even earlier last year and you have a $50,000 gain at your tax rate of 25%, yeah, I hope you have that sitting. I hope you have put money aside for that and didn't just spend it all on Gucci and Louis Vuitton and a whole bunch of other frivolous items, because that's going to be, you're going to have a huge tax to pay.
Yeah.
So I got to talk about that real quick. So, and this came from a conversation Joy and I had yesterday, and we were talking about Beverly's question, how do you control the emotion? But it was different. We weren't talking about the emotion of just investing. We were talking about the emotion of winning at investing. And, very often we feel like, oh, well, this is found money. And so we had a cryptocurrency appreciate $10,000. And we're like, okay, I've always wanted this Gucci purse or this Louis Vuitton purse. or, it's a car that I wanted, so I can use part of this for a car. And we think of it as found money, so we don't track it. We don't have an emotional connection to it. So we just go spend it as if we were spending found money. And when that happens, we then turn around and we meet with our tax attorney, and Attorney Winstead says, well, this is your tax bill. And you think, oh, you think they're gonna take a picture of this? You should try to NFT your Louis Vuitton. So, at that point, your cash that you would have used if you were playing responsibly is now tied up into what you did emotionally.
Mhm.
And the IRS is going to say, well, I know you always wanted it, so it's cool. Don't pay us this time. It's not going to happen. So you really have to think about it, not just planning for the stress of being in the investment, but you have to account for the emotional decision-making that's required after you get out of the investment. So
Yeah.
all these things are very important when it comes to
Well,
Yeah.
and I was going to say back to the point of the team, right? Because I think Bev said it best. As we can help you, it's not, some people subscribe to YOLO. You only live once. I know that's like 2015, but we're going to bring it back for the moment. And nobody's saying don't enjoy yourself, but if you have a plan, if you know you're going to sell one, maybe you need to sell something else that is losing you money to offset it so that you have a better tax strategy. We're just saying have a strategy. Don't just be out here freeballing it. Just have a strategy.
Yeah, so I totally agree. And I think we got a couple more minutes and then we're going to wrap up. I'll say this, in Gloria Hall, I see she's tuned in. And one of the things, it goes back to having a plan. And what I would encourage, just because based upon my own experience now, I know how people can get caught up in the emotion of investing. And once they see that number just skyrocket, they just sell, and then all of a sudden you got this tax bill. But what I would encourage people to do is, if you know that you have, heavily invested in some kind of stock or cryptocurrency, and you never know what stock will actually go up or what crypto will go up, just based upon, even like last year, or was it earlier this year, it was the run with AMC and GameStop, right? So this is why tax planning is important, and having the conversation with your tax advisors are important, because you want to throw out the hypotheticals even before they happen. So let's just even say you bought, hypothetically speaking, 5 shares of Bitcoin when it was $8,000, right? And it went up to 60,000. Maybe your strategy is not to sell all 5 shares, because you end up going to maybe losing half of it in taxes. Maybe your strategy is to sell 2, but you can process all these hypotheticals with your, tax advisor even before you get caught up in the emotion. So most of you who know me know I play basketball, right? This is kind of reminds me of playing basketball, because you have all these, we practice about, if you're coming down the lane and someone comes and cuts you off, how you spin and you turn around and you do an up and under layup. All these things is for game time situations, and you don't want to be caught in the game and not having a counter move, so to speak. So I'm going to give final comments let me go to Joy for any final comments she may want to add to this discussion, and then Brent.
Well, I'm just saying the people are coming, so be prepared. And so let's be prepared for it. Talk to Bev, talk to me, talk to Brent. You need a strategy to if it's either pay now or pay a whole lot, cha-ching, later on.
Yeah, for me, I want to make sure you understand that this is all new, and we don't even understand the government risks that is still coming down the pipeline as it relates to cryptocurrency, because it's changing by the second. And if you're not part of groups, or if you don't have the right team in place and give you proper financial counsel, invest in it. It costs money. To hire us costs money, but to hire us will save you money in the long run. And so you got to think, it's not about just the fact that, well, I just want to take a chance, at least there's no cost. There is a cost, and it could be substantial later on. So really think about what your plan is, for cryptocurrency. Think about what you want to be your outcome. If regulation does change, are you prepared? Are you not prepared? If you have questions, if you're listening to this thinking, I don't know what I'm gonna do with my crypto, or I don't even know if I claim my cryptocurrency from 2019 on my 2020 taxes. Think about it. A lot of us thought the IRS wasn't paying attention, so some people just didn't write it down. They just didn't think it was necessary. Some people forgot about it, legitimately just forgot about it. Whoever you are, if you're listening to this and you're thinking, that's me, you need to just you can go to the 3moneyamigos.com and find us, each one of us, and send us a direct message, or you can go to our respective companies' websites. But either way, you really need to make sure you're talking to somebody, a professional.
Absolutely. Thank you, Brent. Thank you, Joy. My final comment is it goes back to what both Joy and Brent said. Look, President Biden has actually formed a task force to specifically figure out how they're going to regulate cryptocurrency. The other really big thing, and I know Brent would know more about this, is that even now there's US-based cryptocurrencies, right? Which means that crypto is here to stay, no question about it, right? And so, we're just trying to prepare you, whether you have crypto, whether you have stocks, you absolutely want to be able to, do some tax planning around it. And if you know someone who actually sold crypto in 2020 or sold in 2021, have them reach out to, Joy or myself. And, if they owe the IRS, we can both work to help them figure out how they're going to repay the IRS and give them some strategies if they've sold this year to hopefully try to mitigate their tax bills so that in 2022, they're not faced with a astronomical tax bill. And with that being said, I'm going to leave my contact information. My contact information is 301-306-1234. You also can follow me on Twitter at IRS and Instagram at IRS Help Attorney. Joy, do you want to drop your contact information?
Or my phone number is 301-577-6444. My Instagram, LinkedIn, and Twitter, I believe, are all PGS_CPA.
All right. And if anybody listening to this, watching this, is interested in learning more about what cryptocurrency is and how they can get started in the cryptocurrency space, we actually have masterminds that happen on a monthly basis. We have a group, and you can see if joining makes sense for you. You can find us at www.IEAcryptobulls.com. Again, it's www.IEAcryptobulls.com.
All right. Thank you, guys. Thank you for tuning in.